Mirae Asset Mutual Fund has made a mark for themselves as an fund house which is managing equity funds very well. So you might have heard some of the names like emerging equity, large cap, or their equity saver funds. In this video, I am going to tell you three funds which has not been very popular but which are going to make much more sense to you if you are going to take a call to invest in these funds. I'm going to tell you why you need to consider these funds, what are the future lies on these funds, and how it is going to help you in diversifying your portfolio to a larger extent. Hello everyone, I'm Shobhit. I'm a FinBiz growth expert and founder of FinBiz Growth Club. We are an aspiring community of NewAge mutual fund distributors who are determined to change how India is going to invest. So let's talk about the first fund which I want you guys to consider for your investment, and that is a fund of fund which we call as a NYSE FANG ETF fund of fund. Now what this fund is all about. So let me first simplify what this fund of fund means. Fund of fund means whatever money you are going to invest in this fund as an Indian investor, Mirae Asset is going to put this money into an index fund in the US which is called NYSE FANG Plus. Okay, so what this is NYSE FANG Plus fund all about. So NYSE FANG Plus index is index where 10 stocks are there which are going to be investing in the 10 companies which are highly traded in the tech space. Okay, so these are the companies where you are going to get exposure if you are going to invest in a fund of funds in a Mirae Asset scheme. Okay, so how it is going to work out? Whatever money you are going to be putting in here, this money they are going to invest in a FANG Plus index fund in US, and there the money will be distributed among 10 companies equally. So let me tell you quickly what are the companies in which they are going to invest in. So so some of the very popular names like Tesla, then you have Apple, then you have Nevada, then you have Amazon, Twitter, Netflix, Google, and so on and so forth. So in these 10 companies, you are going to have exposure if you are going to invest in a NYSE FANG Plus fund of fund. Now, why you should be investing in a fund of fund and not directly investing in the ETFs of FANG Plus index? The answer lies in the liquidity part. Now, please understand, whenever we as a mutual fund investor or whenever we are going to advise our customer to invest in an ETF, we need to understand that the liquidity and price discovery is going to be totally dependent upon the demand and supply of the buyer and sellers at the exchanges. So it may be that the prices are going up of any index, but the price at which you are going to buy or sell is going to be at the discount or premium depending upon how many people are ready to buy or sell. Whereas if you're going to invest in a fund of fund, there you don't have to find a buyer or seller whenever you are planning to buy or invest in those funds. So the price discovery is going to be very, very simple. The underlying assets valuation is going to be done and it is going to be declared, and mutual fund company is going to either buy the units from you or going to sell the units to you depending upon whether you want to sell or buy in those stocks. So because of this reason, fund of funds are going to be making much more sense. And if you want to diversify beyond the boundaries of India, I think this fund is going to be making much more sense to all of us to have exposure, because US being the biggest equity market all over the world, it is going to make much more sense. It's more so, as Warren Buffett says, we need to be greedy when most of us are very scared. So if you look at the performance of this fund in last 1 year or so, you are going to find that the performance has been less than, or performance is minus 30% or more. So it makes much more sense that whenever the portfolios are down, we need to have a good exposure, and you might be hearing a lot of news regarding US recession and so on and so forth. So I think coming 6 months to 1 year time period is a very good time period to have exposure in this fund, because in this time period you are going to buy at a cheaper rate. And if we have a good time horizon of say 5 to 6 years, I think this fund can reward you to a very large extent. And don't forget that this is also going to be helping you in diversifying your fundamentals. The other aspect which I want to highlight to you is, since you need to remember that if you are investing in this fund, this is a fund of fund, and in India, all fund of funds are going to have debt taxation. So you need to be very clear that if you are going to be investing for 3 years or more, you will be getting that tax arbitrage as well, as most of the debt funds are going to get because of the indexation benefit. So I think you should be considering this, and if you don't have any international fund under your exposure, this is going to be a good way to start your investment journey outside India. The second fund from Mirae stable which I want you guys to consider is going to be a Mirae focused fund. So what this focused fund is all about? Now this is a fund we are going to be investing in a concentrated stock by definition, which is given by the SEBI. So a max number of stocks which any fund can have in a focus fund category is going to be 30. So it is going to have a very concentrated approach. And since the portfolios are going to be very, very concentrated, the volatility or standard deviation in these funds are going to be higher relative to any diversified fund which you might be investing or which you might be investing in or considering to invest. Now, this type of funds are going to be making much more sense if you are looking to invest in a systematic manner into equity schemes. Since any fund which is going to have a higher volatility is going to give you much better risk reward if you are going to do systematic investments or SIPs. I think this fund is going to make much more sense to you, and I would like you guys to invest in Mirae Focus Fund, especially because this fund is going to have a better risk reward ratio compared to other focus fund. And why I am saying you so? Because the first reason is this fund has been highly rated. So if you look at the ratings which the fund has got from various rating agencies like Value Research, this is a 5-star rated fund, and I think it is going to make much more sense to you to start advising or start investing in this fund. From the portfolio point of view also, if you look at this fund is having the highest number of sectors where the fund has invested compared to any other focus fund which are very popular in this category. So it is going to have a much diversified portfolio, even though the fund is going to have a concentrated, but they have managed to diversify across the sector. The highest number sector in which any focus fund has invested, I think Mirae is the one. So because of this reason, I want you guys to consider investing in a focused fund of Mirae. I think it is going to make much more sense for you to have a concentrated bet on a portfolio. It's more so if you're looking for a systematic investment ideas. I think focus fund from Mirae is going to be of good pay. The third fund which I want you guys to consider, which most of investor or distributor communities are not concentrating on, is equity saving funds. Now, what these equity savings funds are all about? These are the very good alternative, or can be a very good alternative if you are looking for a lower risk and better return compared to your bank fixed deposits. Now, if you are looking at today's FD market, the yields are not very good, and equity savings funds can be a very good alternative to the FD market. And you know how big FD market is in the India. So because the market is very huge, and if you are able to pitch equity savings fund in an effective manner, I have no doubt that you are going to be getting a lot of fractions. The biggest plus point for equity saving funds These are the funds where the investments are going to be not only in equities but in arbitrage as well as debt. So the risk or volatility attached to these kind of funds are going to be much lower, and you are going to get better tax efficient return compared to your bank fixed deposits. Okay, so and why I want you guys to consider mirae equity saving funds, because the fund has been doing pretty well, and if you look at the ratings as well, value such as given a 5-star rating. The fund performance has been also very consistent, and if you look at the investment strategy or the portfolio construct which they are going to follow, so they are according to their information or their internal communication, the equity allocation is going to be anywhere between 20% to 45%, arbitrage is going to be from 20% to 70%, and debt is going to be 10% to 35%. Okay, so here you are going to get equity taxation for sure, because money are going to be invested in equity and arbitrage in a major way, and that is going to be a good way to hedge the risk and the in terms of volatility in the investments and get a better risk adjusted return. If you look at the past performance, the most of the equity saving fund categories, if you look at, if 3 years average return, if you are going to look, it is anywhere between 9 to 10%, and I think it's going to be a very good bet if you are going to be pitching this as an alternative, or if you are going looking to invest in a fund which is going to give you a better return and with not lot of risk, and it is going to make much more sense to you. So these are the 3 funds which I want you guys to explore, and I want you guys to put some thought into it, and I think it is going to make much more sense for us as an investor or advisor to diversify our clients' portfolio into these kind of funds. Now, in case this has helped you, this has given you some new dimension to grow or expand your investment horizon. If I have put some new thoughts in your head, I would love you guys to hit the subscribe button, subscribe to our channel, so that whenever we have something new to offer, you guys will be first one to know. Thanks for watching. I'm going to see you next time.